Be honest, we all got involved in trading to make money. I did. I'm pretty sure you watching this did too. But the reality is when you're starting out, you're not really focused on what actually matters. And that is longevity. Longevity in the markets is something that you really should be aiming for. Anyone can make money quick, but it's how long you can do it for and can you keep the money that you've actually just made. Welcome to the video, guys. My name is Marco. I've been trading the markets for over 8 years. And in this video, I'm going to share 3 tips that you can go ahead and use by the end of watching this video. And that's going to help you become consistently profitable by simply just changing your mindset. Now, point number 1, your time horizon. I feel a very big mistake I made and I see many others making is coming to the market with a very short time horizon, large expectations. Now, the reality is that's not going to happen. You might get lucky, you may make a bunch of money, but the truth is you're not going to hold on to it and you don't have the parameters in place to actually keep the money that you've made, and you're more than likely going to kick the can down the road and lose it later on. Now, if you come to the market with a realistic approach, a solid mindset, and you know that you've got to reduce your expectation but broaden your time horizon, that is something that's going to allow you to learn correctly. It's something that's going to allow you to build the patience that is actually involved in becoming a consistently profitable trader. So to summarize that one, it is changing your time horizon. Focusing on the fact that if you want to be a consistently profitable trader, you're going to be in the markets for a few years. This is your career now. Same as a professional footballer, same as an engineer, same as a doctor. It's going to take you years before you can master the art of trading. Are you ready for that? And that's something you need to ask yourself. Second point is down to your risk. If you are merely risking more than you can afford to lose, you are going to have a hard time trading. I'm not saying you need to be rich. I'm not saying you need a bunch of money to start. But if you are trading with your last money in an account, you are going to have an emotional attachment to that money. So by all means, take a break, start trading later down the line. But trading is a means of multiplying the money that you have. If you do not have any money, you're going to be too emotional and you're not going to be able to make rational decisions if you're too emotionally attached to the money. So to summarize that one, it was your risk. Think about the money that you are putting into the market. If you're risking the last money that you possibly have, it is not going to work out for you. There again, you're kicking the can down the road and you are going to blow up and you are going to lose your money. Point number 3, building an edge. Now, Marco, what is an edge? How do I build an edge? The reality is, folks, if you cannot come to the market and establish what works for you over a period of time, you're not going to be consistently profitable. And I preach this every day in my mentorship, that if you cannot look at the data, look at what works for you over a period of time, how are you going to know what you can replicate? How do you know if a system works and how it's going to work in a year from now? The reality is you don't if you don't have the numbers. Building an edge requires the first 2 points. 1, broadening your time horizons. And 2, managing your risk. Understanding that if you play out your edge in markets, yes, it might take you 6 months to find your edge. But if you manage your risk and you play out the same types of trades over and over again, you are going to find what your edge is. Once you have your edge, you will know that over 20 trades, I know that I can go ahead, risk 0.5% on these next 20 trades. I'll be a net profit of 7% up over those 20 trades. Okay, great. Carry on. Keep trading those 20 trade cycles. Now, how do you find your edge? Your edge will start simply by looking for the pairs that you trade. Trade 10 or 20 trades with a fixed risk, fixed lot size, or fixed risk per position. That's entirely up to you. That's your discretion. And figure out what works. Write it on a piece of paper. If you've done 20 trades and you're in a loss, look at the trades. Look at how you manage them. Look at the time of execution. Look at how you could have improved. Go again for another 20. And go again for another 20. Go again for another 20 until you find what works. Now, the reality is, folks, most people aren't patient enough to do that. I've spent years working myself as a trader to the point where I'm actually satisfied with who I've become now, but the work doesn't stop. I need to keep doing what I'm doing, and I need to keep optimizing, and I need to keep working on my edge. Markets are forever changing and forever evolving. You cannot stick to a simple mundane strategy and expect that the world's going to come fall in your lap. You have to keep putting in the work, and it's so, so crucial. So to summarize that point, it's building an edge. How are you going to build an edge? You want to go ahead and decide for yourself what your risk is, what your time horizon is, and you want to trade your strategy out in markets. It can be a simple breakout strategy. It can be a Fibonacci strategy. It can be ICT. It can be anything. But the trader determines the outcome of that strategy, not the strategy itself. How disciplined are you over 10 or 20 trades? Then do some numbers. Look at how much you'd made after 20 trades. Okay, great. Go again for another 20 trades. Now, the reality is most traders enter the prop firm world without realizing if they trade their strategy over a period of time, what's their max drawdown? How often, do they hit 10%? Do they hit 15%? Okay, maybe they should risk less. People don't have these figures. It's shocking to me that they want to make money consistently. They want to be trading in 5 years, but they don't even know how accurate their method of trading is. It doesn't take a rocket scientist to know that you just need to manage your risk over a period of time, and you're going to have a net profit on your trades. But it's down to the trader. It's down to you, and it's down to me to work on ourselves. Don't let this whole social media gimmick fool you, right? Focus on these 3 principles. Come back to this video if you have to, and I promise you're going to have a different mindset in markets. So let's summarize those 3 points, folks. It was 1, broadening your time horizons. I hit my screen there. Broadening your time horizons while lowering your risk, right? Point 2, it's your risk. Knowing how much you can put into the market, not spending your last dime in the market because you're going to be too emotional. Risk what you're willing to lose. And point number 3, build an edge out in markets. Know that over 20 trades, this is my average performance while trading Euro dollar and cable. That's Euro USD, GBP USD. Once you've established that, great. Repeat, repeat, repeat. And that's what you should be doing as a trader. And that's my advice, folks. But if you're new to the channel, click the link down below in the description. There is a free Telegram. Go ahead and join that free Telegram. There's going to be loads of insider tips and information from me. More importantly, a 7-day workshop that I have coming out very, very soon, which will teach you 2 of the strategies I know and pretty much summarize what I've learned over the past 8 years. So look out for that one. That should be coming very, very soon. But like always, my friends, keep going. Don't forget to drop a thumbs up and a comment down below, and I'll see you on the very next video. Peace out.